The last time that we spoke to Mr. Anil Rai Gupta during the Q1 results, he had mentioned about how there was a demand deferment but not demand cancellation, and that margins may have looked iffy. They might continue to look iffy in Q2, but that would probably be the trough as far as the margin picture goes as well. This quarter around, when the numbers came out, you can see that there are visible green shoots in demand. Maybe he might like to define it otherwise. And in the press release, it's mentioned that margins have probably hit the trough levels. Let's get him in on the conversation, talk about the larger consumer space and then Havells numbers as well. Mr. Gupta, great having you. Thanks for joining in.
Thank you. Thank you. Thank you for being here. And thank you for reminding me my last comments.
No, not at all. I mean, they were telltale comments because they've come out that way. Mr. Gupta, can you please can you kind of tell us what you thought about the quarter, about consumer demand in particular, and what inklings does it have for Q3?
So I feel while we are quite satisfied with the revenue performance in the second quarter, but I do feel that we could see some sluggishness in the consumer demand, though the industrial and the project segment continue to do well, which is still about 1/4 of the overall business. But the consumer demand was sluggish. I believe that the reasons could have been very high prices built up in the last 1 year, the inflationary trends. However, in the second quarter, you've noticed that we have lower margins, and the reasons for that, we had anticipated that in the first quarter, because one, the material was made at very high prices, so we had inventory in the system. But the raw material prices had started coming down in the first quarter and also continued to come down in the second quarter, which actually means that you start selling in the market at lower prices with high inventories in the system. So the margins were affected. Now that the inventories are getting out of the system practically almost entirely, so we do believe that the normalized levels margins should start coming in the third quarter and definitely fully in the fourth quarter. But it also means that because the prices are stabilizing, it also augurs well for the demand scenario in the third and fourth quarter. So I think overall, the future looks positive both on the demand side and the margin side. But yes, as the second quarter, the demand was a bit sluggish on the consumer side, but the margins were affected.
Interesting. Can I just ask a quick follow-up here? The most common belief is that companies will hike prices naturally so to cover the inflation cost in raw materials. But when raw materials cool off, the cuts are not linear, and rightly so as well in certain cases. But here I hear you say that raw material prices came off and companies like yours did cut down prices quite immediately. So there's a dichotomy out here of sorts.
Right. Segment wise, because we are operating very different segments, segment wise, it can be different. First of all, I must say, while the raw material prices are passed on to the market, the last year raw material increase was unprecedented. And which means that companies, not only us, but many companies did not pass on the entire cost, thinking that this raw material price increase, rightly so, is transient. So the entire cost was not passed on to the market. Now, when the raw material prices come down, yes, there is a cool off in prices, maybe not to that extent, but certain business segments, especially cables and wires, where the value add is lesser as compared to the other businesses. When the raw material prices go up, the entire cost is passed on to the market. When they come down, the entire cost is passed on to the market. The reduction. So that happens very quickly in cables and wires, may not be so apparent in the other businesses.
Got it. Now, before I talk about demand and consumers, just one quick follow-up to get margins out of the way. Last quarter, you had said that Q2 will be tough. Maybe that is the trough. Your press release seems to indicate that. I would love to hear from you.
Yeah, when I say yes, it was tough on the margin side, but it also was a trough, as I said, because most of the high cost inventory is now out of the system. In the case of Lloyd, the high cost inventory continues to remain for the third quarter, but not so much. So we anticipate that this will be taken care of in the third quarter. So in all the other businesses, the margin should start coming back to the normal levels from third quarter, definitely for Lloyd in the fourth quarter.
Okay, so ceteris paribus, Q4 is when we see a normalized performance from Havells on the cost and the margin front.
Right.
Okay, great. Now, Mr. Gupta, a word on consumer demand at large and then about Havells individually as well. In a bit of a unique situation wherein the West seems to be kind of crumbling or coming apart at the seams. India seems to be largely doing okay. and we are in the festive season. What's your sense on whether this time around, if indeed that's how the playbook shapes up, that India does well, whereas the West may not, what happens to the consumer sentiment and consumer demand in India, to your mind, not just for Havells, but for the space at large, sir?
I think overall, India is a bit insulated as well. I mean, and I'm saying insulated, but when raw materials go up or down, overall it does affect India as well. But India has a unique situation where the demographics are such where things will continue to be doing well in the consumer side. Real estate continues to do well. The problem here could be the high interest rates, not because of India reasons, but global reasons. So the interest rates are hardening, could impact the real estate demand in the coming times. But overall, I do believe that India is in a better position as compared to the world. And hence, I'm very confident about the demand outlook for the future.
Actually, I thought the demand numbers from the looks of it look pretty okay for Havells in Q2 as well. I don't know if you think about it differently, part one. And part two, you had mentioned in the first quarter, as I mentioned in the opening remark as well, that because of the cost factors, there was some demand deferment that had happened in quarter one. Did you see signs of that coming back in quarter two as well?
No, I think I feel that, while we are quite satisfied with the growth, but it could have been much better. The reason I see the three towns in the rural areas, which actually defies the logic because that's where the real growth should come from. But that's also because of the high inflation. So people have deferred the demand. As I said, in the second quarter, things have started settling down. The effect of that should start coming now, not so much in the second quarter.
Okay, so I would, from a demand perspective, Mr. Gupta, could we see a normal festive season quarter in quarter three?
Pretty much so. I would still say that it's still early days, and things were a bit slow in the initial phase. The second half of the festive season has started doing better. So we still have to see how it pans out. But let's hope for a good quarter. I mean, the demand should be doing well. On the other side, the project segment, the industrial segment continues to do well. If the real estate, outlook continues to hold up, I think third and fourth quarters should start looking good.
Okay. Any regulatory changes, Mr. Gupta, that could impact either margins or the demand itself or dispatches, as the case may be?
Yes, there are energy efficiency norms changing, both for air conditioners and fans. So there will be some amount of old inventory which will be sold in the third quarter. That's why I said for these products, there could be some, especially in case of ACs, there could be some less normalized levels of margins in the third quarter. But going forward in the fourth quarter should start coming back to normal.
Okay, my final question, Mr. Gupta, and that is on how do you expect from your own perspective, capacity utilization levels to be? Last time around, we had spoken about the need for Capex and the right timing for it. Even if it means at the cost of repetition, could you just fill us in on how you feel about it?
No, I think if you see Havells, especially during COVID times, the Capex was slowed down a little bit, and Havells has grown from almost 10,000 crores. So we are growing at more than 15% CAGR during this time also. So the capacities are getting utilized from plant to plant, but anywhere between 60 to 90%. So capacity additions are happening. Our water heater manufacturing facility has already started. We have doubled the capacity there. We are doubling the capacity in air conditioners, and that should start on-stream production in the fourth quarter. We're also adding up a unit for cables and wires in the southern part of India. So capacity is being added. So overall, we are looking at a high Capex for this year and the coming year.
Okay, and then the benefits of it could start, last question, the benefits of which could start showing in some fashion in FY24 itself, you reckon, if demand stays strong?
Yes, definitely.
Okay, great. Mr. Gupta, great having you. To you, your team and your family, a very happy Diwali and a prosperous New Year, sir.
Thank you, and you all. Happy Diwali to you all.
Thank you so much, and viewers, thanks for tuning in.